is that we lose immediately into an ARB sell, and then into another ARB sell, and then into another trade. You see that the frequency is very heavy on the sell side for sell side rotations, and obviously we need to improve on that position. We start to improve on it here. You can see that we're starting to improve on that position here. So this becomes a trade that we could be looking to buy back into the bottom edge reversals. Coming off the 60 would make a lot of sense. Now, how do we know that? Because we can see it. There's a big difference here, isn't there? The blue line has actually made a lower low, so we know that that is what we call volume absorption. You see it? Volume absorption. And if we know that the market makers are making volume absorption, this is a higher probability buy trade. It's the same as this storyline here. Now, they're not absorbing, but they are hitting a pin zone. And then with the arrival of the A10 and the big volume, that gives you the confidence that that's probably the bottom edge price. The ARB sellers come in and jam the price up, takes the price back down again, which is nice. So obviously taking the price back down again, we're now seeing this absorption of volumes, which is very bullish. Take your shot. 60 longs, just traded 70, and we're going to see if we can take this market back over the 70s, get the 75 hedgers to unwind, and then obviously then to see if it develops some upside potential here. See if it develops some upside potential. Now, in terms of the leveraged fund guys, they're not on this trade yet. They are buying very quietly, but they're not on this trade yet. They didn't join me in the buying phase, which obviously it's always better if they do, but it is what it is. It's not going to take me off the trade. I'm going to do my own thing. And obviously buying into that storyline to me seemed to make, well, a fair amount of sense. So you can see how you can use Max to kind of direct the traffic on this. It really can be a very valuable piece of your jigsaw. Now, one of the things we did see is that we've still seen the nominals trading at a discount to real yield. So we do want to buy dips, don't we? It's the thing that we've been talking about, nominals trading at a discount to real yields. Buying dips seems to make a little bit of sense. The regular yield is yields or 1 over bond, Sebastian. And real yields is basically whatever you want to make it. Now, the real yield I've got on my charts are the 2s, the 5s, and the 10s. Sorry, the 2s, the 5s, and the 1s, because I like to look at the short-term end of the real yield spectrum at times. So the chart I'm using is the 2s, the 5s, and the 1-year yields divided by oil, copper, beans, wheat, and gas. So it's like a full, extensive commodity group versus the front end of the curve. But obviously you can build it on the back end as well. You can obviously build it on the back end, no problem with that. If you want to build it on the back end, you just use maybe the 5s, the 10s, and the 30s. Or just the 10s, whatever floats your boat. Just the 10s will do you as well. You should see that they're pretty much always the same, right? They're pretty much always the same anyway, but they're not always the same. Obviously, if there's been a fast money flush to the downside or the upside on treasuries, you sometimes see them slightly different. But the general rule should be they should be going up or down. And they've been going up today, which has led to the discount that we've seen on nominals. And obviously that means if we've got a discount on nominals, we should be buying nominals. We should be selling lots of treasuries, right? Well, what have we been telling you since 11 o'clock this morning? We've been selling treasuries, haven't we? So we're selling that treasury for that nominal buy trade that we've been talking about. We've been selling treasuries literally all for the entire morning today. So that's why I'm a wee bit more bullish than maybe a lot of people are on equities, because I'm selling treasuries, I'm buying nominal yields in line with that discount attached to the real yield storyline. And because of that, I'm actually a little bit more bullish than perhaps a lot of people would think as an equity trader. Does that make perfect sense against just last week's classrooms? Hope it does. It should do. It's what we've been talking about. And that little buy trade's actually worked out quite nicely, hasn't it? That cheeky little buy trade at 55.60 has just traded 55.80. We've just done another $1,000, guys. So when you look at that from the model that we build or we have built, is there anybody that doesn't see that relationship shifting here? There's a very strong shift in that relationship into that bottom edge price, isn't there? Very strong relationship shift, and you can see the absorption of the volumes in here. And obviously the volume shift in this area here flips the volume shift in this area here. So we know that there has been a volume shift. This is why we call it the market makers, because they are able to go very, very nicely and very nimbly from being sell side in this area to very, very quickly buy side in this area here. And that's what we start looking for. We start looking at that volume change in the direction of the underlying process. And obviously, if we like the storyline at that stage, we should be pretty good to go, shouldn't we? And that turned out to be an absolute sensation, didn't it? An absolute sensation. Another $1,000 put into the account, guys.